All right. All right. What's up, everyone? How's everyone doing? Appreciate you guys for being here today. What's good, bro? Glad to see you on here. And for everyone on the recording, good morning, good night, or good evening, wherever it is that you guys are at. It is 11:14 p.m. here in Utah, where I'm at. So happy to be here today. Let's see. I really wanted to dive into a couple of things today, so let's dive right into it. Oh, by the way, this is a quote for one of my favorite influencers, Tom Bilyeu, actually. In case you guys don't know who that is. Okay, net worth. I'm pretty sure right now roughly about 400 million. But he was the one that started Quest and sold it for $1 billion, actually. Yeah, sold it for over $1 billion. So Quest, I'm sure you guys have heard of like Quest bars and all that. that's what he started, actually. So pretty interesting. I listen to people that have what I want, and definitely would be cool to own a multimedia company, because that's what he sold his Quest built for, more than $1 billion. Yeah, he developed a corporation to be valued at more than $1 billion. Yeah, as of 2022. That's pretty crazy. As of 2022, net worth is 400 million. Yeah, he sold Quest, and then he started Impact Theory, which is a multimedia company. Anyways, he said this in one of his podcasts. I was listening to him and Jay Shetty, and he said one of the most impactful things in his life was when he stopped seeking for the right answer. I mean, he stopped seeking to be right all the time, because and I think this is one of my biggest weaknesses. So get ready to get pretty vulnerable today on today's recording. So when it comes to like seeking to be right versus seeking the right answer, personally, what that does for you is it lets you be open to listening to the other side, to the other perspective, and truly allows you to be more present, and also to learn from any and all aspects that come by. So today we're going to go over, let me pull my keyboard up. Okay, today we're going to go over, one sec. Yeah. Today we're going to go over demo versus live. So this is just, and I just want you guys to know, these are my personal thoughts, beliefs, and ideas that I've came across and developed over the times and years of trading. So let me know if you guys have any questions, comments as well. Let's see this. Put this right here. Yep, cool. Okay, so demo versus live. Okay, let me just put that actually right there. And make it like that. Hold on one sec. Okay, cool. So now we're gonna drag this real quick. We're gonna put, all right, so my thoughts about demo versus live, guys. Personal, this is just me. When it came to demo, I've traded demo, and I used to, at the beginning of my trading, I traded demo a lot, which led to a lot of like really reckless habit development. So what I mean is like I developed a habit of over trading. I developed a habit of looking at the markets all the time. I developed the habit of thinking that I developed the belief that I could find a setup every single day. Even though there is setups every day, I don't have to find a setup every single day. Um, I developed a habit of trading without a trading plan. And so all of these things came from this. Now, if you're someone else that took their demo trading a lot more serious than I did, congrats there. I personally didn't take my demo trading serious till I started taking the challenges. Once I started taking the challenges, that's really when everything started building up for me. And so let me know if you guys have trouble hearing me at all, okay? So one of the first things that I personally did was I realized, okay, what's holding me back from trading live and experiencing real live market environments is the fear of losing money, the fear of being wrong. And so there's a lot of fear in our when we think about live trading or when we think about risking live capital. But what I can tell you is that I would love to for you guys to deviate from being so, because the only reason I guess what I'm trying to say is the only reason that we may feel fear is because we may not be comfortable with the level of risk that we are putting on the table. And so what demo does also did for me is I was always doing like demo like 100Ks, and so I wasn't really being realistic as to how much capital my mentality, my psychology was actually ready for, how much equity my mind was actually ready to handle in a live market environment. And so the first account that I passed was actually 100K. I passed it really fairly fast actually. And the only thing that with that, it was just not sustainable. Even though I had practiced quite a bit, my style of trading was still fearful, and it was because of these following things. So one of the things that I felt fearful for was whether I was going to be right or wrong. So I was looking. This is one of, and whatever I'm writing up here, I hope you guys are taking notes of it too, whether you're on the recording or on the live session. Okay, these are common trading mistakes that I notice happen with me at the beginning, and maybe even now. Okay, so looking at my beliefs as right or wrong. So what do I mean by that? So when I get a trade right or wrong, I believe this trade is going to, I take this trade because I believe that it's going to go my direction. Okay, and so when it doesn't go in my direction, what happens is that I feel like I'm wrong, right? I was looking to be right, and therefore if I'm not right, then I'm wrong. And so what that does is instead of looking for the right answer, like Tom Billu said, we're looking to be right. Okay, so our approach to the market is shifted. Instead of looking to see if your trade is right or wrong, look for the right answer within that trade setup, whether it failed or didn't. What went right? What did go right? And within that trade, yeah, maybe it clapped you out, but what was the right side of the market, and what way did it move? What was the right answer within that setup to do? You know, whether it was sitting on your hands, going break even here, but finding the right answer within that experience. Okay. So number 2, when you decide to get into the market, what are you putting on the line? Okay, so when you decide, oh shit. Okay, so when you decide to go live, okay, when you decide to go live, acknowledge what am I putting on the line. Okay, so acknowledge what am I putting on the line, right? When you're ready to go live, acknowledge, okay, what am I putting on the line? Am I going to put my own money, my own capital into this? Am I going to decide to go funded? If you're going to go with a live account, what is that goal that you want to hit before you go live? How much do you want to save up? Do you necessarily need to have, X amount of money to start? So here's my question. A lot of individuals wait for a paycheck or wait to save a certain amount, wait to take off, X amount of time off their work, or wait for, waiting for something to happen right now that will help them achieve their funded account. And so what I would say to that is, why wait? Okay. So why wait to go live? So number 3, okay, so why wait to go live? A lot of individuals have very good reasonable, everyone has a very good reason as to why they're not going live right now. It may be fear, maybe they don't have enough capital, maybe X, Y, and Z. But I want to show you guys that, and I show this a lot, I feel like, but I just want to show you guys that, a funded account is, and for some reason, my Forex funds takes forever. Whoa. Looks a little different for some reason. Yeah, I want to show you guys this because it's crazy. My belief level was that it's hard to trade, but now my understanding is truly, okay, look, it only takes $90 to get to 5 figures, to be able to manage 5-figure equity, a 5-figure account. And so, 140 to 20 to double that, 10K. So it doesn't take much to to go live or to go trade with real live market environments. And so why wait to go live? Okay, I know that a lot of people want to be 6-figure traders, but what's wrong with being a 5-figure trader with a 6-figure mentality? Right? Because at the end of the day, you're looking to, or what's wrong with being a 6-figure trader with a 7-figure mentality? Nothing, right? It's just where we all have to start somewhere. We all have to go down a certain path to get to where we need to go. It's not going to be from point A to a point B. It's going to be from point A to B to C to D to E to F, and it's just going to keep going, right? So we have to hit these different phases, seasons in our lives, in our journey, to get to where we need to go. And all I could tell you guys, if you're not trading live, you're shorting yourself experiences that you could be learning from and gaining a lot of value from, that you may not be getting with a demo account. So there's nothing wrong with trading demo. I say trade demo. To if you're barely starting, of course, trade demo. Get the concepts down, trade demo, learn how to click a button, download everything, and learn your resources, whatever, right? But once all that foundation is set up, there's no reason why to hold back. Having options as affordable as $84, it's a no-brainer to not be trading live right now. If it's okay, let's say you fail a challenge in 1 month and in the month of October, okay? And it's about the 18th, like it is today. It's the 18th still with me. For some of you, it's already the 19th. Let's say it's the 19th already. Okay, it's the 19th already. It's halfway, a little bit over halfway. For the rest of the month, I'm okay with trading demo, learning from my mistakes, reevaluating my challenge, and then back in November, I'm like at the start of November, I'm gonna have a challenge ready for me to go back at it. Or at the end of October, the last week of October, I'm gonna have a challenge ready for me to go back at it. You know, not necessarily do you always have to take so much time away from live trading. Having this at your disposal, affording one of these a paycheck or a month, you know, I wouldn't say paycheck. If you get paid weekly, like don't take these weekly. But if you are somebody that gets paid, you know, like twice a month, I don't see why not. You know what I mean? If you give yourself at least, you know, a couple of days in between, cool, go trade demo on those days in between. But that's about it. Besides that, there's no reason why not to go with a live choice. You'll learn a lot more. Okay, so just want to open your guys' eyes to new options and how to approach your goals. Because if you want to be a funded trader, there's no reason why wait to be a 6-figure funded trader when you can be a 5-figure funded trader by the end of the month. You know what I mean? So with that said, why wait? Okay, so how are you approaching the market? What is your risk percentage per trade, and how do you prefer to pay yourself out? These are all things that I would always look at the market before jumping in. Is how am I approaching the market? Okay, how am I approaching the market? Am I going to be a scalper, day trader, swing trader? Is the market bearish, bullish? What is my approach today? What is my bias? Today, you know what? I know a lot of people that their risk per trade varies. And it varies whether they're in profit or whether they're in drawdown. And I like that rule. Mine isn't like that necessarily, but I like that rule a lot. I have somebody else that risk 0.5% per trade until he's 5% in profit, and then he risks 1% per trade. I like that approach as well. I think it's very unique. Or how do you prefer to pay yourself out? Okay, so how do you prefer to pay yourself out? Do you want a partial out? Do you want a twin trade? Do you want to take profit? Do you want to just partial out of 1 to 3, 1 to 5? Your exits are super important. That's your whole approach to the market. Okay, so how is your approach? How am I approaching the market? Okay. How many have you? So drop me some 7s in the chat, or if you're in the recording, you know, then answer this to yourself. Okay, how many of us have ever believed to think that a big lot size equals a big payout? Okay, so that's an approach, right? That's an approach to the market right there. Your approach to the market may be behind the belief that is supported with a belief that a big lot size means a big payout. Okay. But the truth is when we accept that as our reality, we also need to accept that a big lot size also is equivalent to a big risk. Okay. So it has an opposing, it's always going to have a polar pull cause. Every cause is going to have a equal or negative effect. So you need to understand. So with that in thought, you need to understand your pain tolerance in the market. Okay, so understanding our pain tolerance This is important, so I'm gonna write it down. Okay. Understand your pain tolerance in the market. Okay, so understanding your pain tolerance in the market. So what does this mean? All right, so when we are approaching the market, I need to understand, okay, my pain, my fear comes from the level of risk that I put on the table. So if I have, just like when you're getting, I don't know, drop some fours if you guys have ever had a tattoo or have ever gotten burn or anything like that, and the pain was, you know, pretty big, you would say. Excruciating. Cool. Okay. So then you understand what your pain tolerance may be like. When you experience something at a high level of pain tolerance, you start to understand where your threshold is. Okay. So at first, it's cool to play around with your risk. Okay. But I say, you know, a good 2-3 months into trading, that's enough playing around with that risk. It's about to be a consistent. It's more beneficial to be a consistent trader. But most of us navigate through that for about a year. I know I did for about a year and a half. I navigated through a varying risk parameter. Okay. I gave every excuse in the book too, you know, and that was also me. I did believe that a bigger lot size, that was my approach before. Bigger lot size, tighter stop, fatter lot. I don't know if you guys ever remember that, but tighter stop, fatter lot. That's what I used to tell myself when I learned the smaller time frames. It's horrible. And those beliefs would encourage me to like go aggressive against the market. So it was bad approach. So, but I'm grateful for those moments back then because it helped me understand my pain tolerance against the market. Even though it took a while for me to understand my pain tolerance, it took a lot of income for me to understand my pain tolerance, my threshold. I'm not someone that learns right off the bat, but definitely learn it eventually. So, what is your pain tolerance? All right. You need to understand your pain tolerance. Okay, you need to have a risk percentage based from every unique trade idea. So having a risk percentage. So again, going back to the individuals that you know, I really like this approach of having only risking 0.5% at the beginning of a challenge until you get to a certain percentage, whether it be 3 or 4%, and then going 1% risk. I think that approach is really like, it's a really good way to build up. I think, say if you're comfortable with 1%, then that's your unique trade. You know, that's your unique trade approach. That's your unique risk parameter. So have a set risk percentage. Have a risk percentage based from unique trade ideas, right? Okay, so cool. All right, so having a set risk, so that way you predetermine these things. Like I have a London setup, and on that one I always drop 1%. You know, and I have the only way I'll ever go over 1% is if I have a specific re-entry setup and a step by step as to what needs to happen for me to get into a re-entry. So that's what this means. And also, when I re-enter, it's not the same amount of risk as my initial trade. And so you see, like, there's different ways to approach the market. So just have that in mind. Now, when we're looking at risk, it's about understanding that there's no trade, okay, one trade should never have a negative effect on your behavior or day. Okay, so one trade should never have a negative effect on your behavior or day. So if you're noticing that you're already having a shitty day because you're trading, it's time to stop. You know, at first when I started trading, and I used to get mad a lot, really often, but the more I learned to walk away, the more I learned that to chill the fuck out, like just not take it so not be so offended by or attached to the outcome. So one trade should never have a negative effect on your behavior or day. Okay. So in other words, like, losing should be nothing. Like, should be, you know, losing is not even like a pinch. You just acknowledge the fact that you lost, and then you just leave it, drop it, and that's it. You know what I mean? One second. I made some notes for this call, that's why. Okay, so now most people average out at about 2% risk. So understand this: when people start out in this industry, they always go really aggressive. But I noticed that most people, without much training, most retail average out about 2% risk per trade. Okay, so let's say you lose 4 or 5 of those trades in a row. A lot of individuals would be negatively phased by losing 5 to 10%. So let's say you're one of those individuals that risk about 1 to 2%, and your accuracy is below 50%, then you need to understand that right there tells you, okay, if my accuracy is below 50% and I'm missing half of my trades, that means I could potentially lose the next 4 to 5 trades before I find my winning trade. Okay, I could potentially, odds are that I could potentially lose the next 4 to 5 trades. And in a challenge, using 2%, that is an automatic fail out of 10%. Oh, I guess 12% with my Forex funds, but you guys already know what I mean. Okay, being 5 to 10% in drawdown can have a really strong negative effect on your mentality. Give me 1 second, I'm gonna grab some water. Okay, sorry about that. I needed some water. I was parched. So, you know, a lot of people feel as if now they're they're coming behind because, man, like, I just put myself in drawdown after just 4 trades. I put myself in drawdown 6-7%, and then, like, honestly, there's no reason why I should ever be like that. You know, after 5 trades, you should not be like traumatized, detrimented, or anything like that, right? Mistakes happen, but that's why we have systems to double check, and there's ways to avoid making simple mistakes. So I do understand that mistakes happen, but it should never have a negative effect on your day. And if it did, then it's time to step away. You need to have that percentage per trade locked in. Okay? I'm gonna keep saying that until you guys like have it engraved on your head. Okay, make it impossible for you to break that habit. Same consistent risk parameters. How do you make it impossible? Trade from your desktop, download a precision calculator, and that way you never have to stress about it. Okay, make it impossible for you to risk more than 1% if that's your parameter. Your goal as a trader is not to avoid losing, but to set yourself up to. Okay, this is important, and I know that you guys have seen it before, but you need to set yourself up. Okay, as a trader, as a professional trader, you need to set yourself up to lose small. Okay, when you do lose small. Break even, win small, and win big. Okay, that is, as a professional trader, that is what your goals should be. Okay, so give me one sec. All right, so no trade should ever have a negative effect on your mental stability. Okay, because if you follow this plan, okay, if you follow this plan, lose small, break even, win big, or win small, then no trade should ever have a detrimental effect or a negative effect on your mental stability. And if it ever does, again, that's another sign to step away. But the thing is like, I want you guys to phase that person. It's like all of these things, they're bringing out true colors of yourself that you may not have seen before. And these are good things to experience, because then you learn how to handle them in real life, like experience, you know what I mean? So have you guys ever like had a moment where you needed to really think fast, or something bad was going to happen, a car accident, something with a lot of adrenaline, a fight, physical argument, or whatever it may have been, gunshots, or I don't know, whatever, where you needed a earthquake, tsunami, whatever, wherever it is that you're at, running from an animal, that you needed to think fast, you need to think on your toes. And you may have choked, or you may have gotten such a rush of adrenaline that you just could not handle. Those are places where a lot of people avoid to be, but we as traders need to live in. It's called living in a state of fear. Okay, because it's not, when you're in a relationship and you guys fight, you're afraid of breakup. So what do you do with the fight? You toss the fear over, like, underneath a rug, and forget about it, and then think like out of sight, out of mind. But in reality, it's never out of mind, because it comes back, right? And it's just like your fear. You can't just toss your fear like under a rug and think that you're not gonna, if I tell myself I'm not gonna be afraid, then I'm not gonna be afraid through this trade. It doesn't work like that. Yeah, it does not work like that. Like, you can't just command yourself to not be afraid. You're gonna feel fear. And let me share this with you guys. This quote, okay, because I have it written down here. So I want you guys to dive deep into your fear, face it, embrace it, make friends with it. This does not mean you will no longer have fear, because there's no person that like ever doesn't feel fear, guys. Everyone always feels fear. It just means that fear will no longer have you. And so live in that fearful state of mind, trade live, have tamed that beast, because that the person that's going to be able to be confident, the most confident in those fearful moments, is going to make the most money, because your results are filtered by your beliefs. What the results that you guys are seeing in your trading is filtered by the belief and confidence that you have in yourself currently. And if you're not facing live trading environments, then you're missing out on facing actual fear from the market. And it's okay to be afraid. Acknowledge it. Like that quote said, it's not that you will no longer have fear, is that fear will no longer have you. Okay, so acknowledge your fear. Embrace it. What was it? Acknowledge your fear. I don't know how to spell acknowledge, I'm not gonna lie. Acknowledge your fear, embrace it, become friends with your fear, because there's nothing, we know what they say, like, keep your friends close and your enemies closer, right? But become friends with your fear, get close to it, acknowledge, know yourself better in that state of mind, and tame that self. Because honestly, when you realize that fear is just a misconcepted excitement, a misunderstood excitement, when you understand that fear is something that is a sign for you to do certain things, and you know how to handle your fear and take it, not just shove it aside, not just ignore it, but truly embrace it, then fear will no longer have you. And that is a good feeling, to walk into the markets, into a day of the markets where you have literally zero expectations, or into a day in the world where you literally have zero expectations, and therefore there's no actual fear, because there's nothing that you're expecting from the other side of this other than an experience and being there at that moment. And so when you align yourself in that state of mind, acknowledge your fear, being with it, you become friends with your fear, right? So it's a pretty interesting concept. I'm gonna type this out real quick. Okay. So again, I'm gonna write this one down too, because also this was good. So no trade should ever have a negative. Oh, where am I typing this? To be honest, I don't even, clearly not typing on here. Should ever have a negative effect on your mentality. Okay, so again, if I'm writing anything down over here, I hope that you guys are too. Okay, I'm not just over here typing up. Because I don't tend to type. I'm not much of a typer, as you guys can tell. Okay. All right, so Okay, I could do anything. Let's run it. Okay, so how many losses can you take without being phased? What is your pain tolerance? Okay, how many losses can you take without being phased? So if you're risking 1%, how many of those 1% in a row can you take without being phased by the market, without being hurt by the market? And that's your daily threshold. Okay, whatever that threshold is, that's your daily threshold. There's no reason why you should ever go past that threshold or get close to it, like half it. If your threshold is 5%, then 3% or 2.5, like half it. Whatever you think your threshold is, half it. That's what one really good trader mentioned to me one time. It's like, Bash, whatever you think your threshold is, just half that risk and you'll be in it for the longer run. And it's true. Here I am, like, still pushing through and learning more than ever. So yeah. So how many losses can you take without being phased? Okay, so since it's okay, so you guys have been, I'm just going to assume you guys have been keeping up with the Beyond Your Beliefs episodes, and so you guys understand that we trade what we believe of the market. So we don't trade the market assets, we trade our beliefs of the market. Okay, so when you start to feel good about a setup, and all your confirmations are lining up and your emotions are getting involved, and the trade setup is just looking really, really good. Okay, what happens is, in those moments, we become more emotionally invested, okay, into this setup, into this one particular setup. Okay, and a lot of us get so hooked onto a setup that we say, why don't I re-enter, or what if I find a re-entry? And so therefore, in other words, we're saying, what if we double down on this? Okay, so now you double down on something. You were up so and so percent, but now you double down because you found exactly what you were looking for, because that's how powerful your mind is. It will find exactly what you're looking for. But remember, this is not a better trade or a worse trade. We're not going to, remember from the beginning, looking at our beliefs as right or wrong is a limitation. So if you're going to look at this trade, whether it's better or worse, that's a limitation right there. Every single trade should be very biased to every single trade. Your risk shouldn't be based off whether you feel like this trade is better or worse, or you believe that this trade is better or worse, or right or wrong. It's whether your confirmations are there or not. It's really not not better or worse. It's just another trade. You just feel really good about it. That's it. And that's why your confirmations are there, so that when they present themselves, you can execute and take the risk that you predetermined in your plan, instead of relying on emotion. I'm not going to type all that out. That was a lot. So, but you guys can definitely revisit the recording on that part. Okay, so that's why we have a plan. Your risk should not be determined on the spot. So that's why you have the plan, right? Going back to the same thing. You have a predetermined risk that is followed by your confirmations that appeared. That risk shouldn't be determined on the spot. It shouldn't be determined as the trade is playing out. It should be predetermined, right? So again, keep your risk consistent. Understand that it doesn't matter how much you lose, okay, it's how much you invest. It's how consistent you stay, how consistent you stay showing up to the market, showing up every day to the live environment, showing up for yourself. That's what really matters. Okay, is the time that you are investing. Be sure you know what your pain tolerance is to losing. We already went through that. And take the time to reflect before ever jumping back into the markets. So that's my last bullet here, which I feel like it's a really good way to end it. Take time to reflect before jumping back. Okay, so take the time to reflect on your losses, if you failed the challenge, take the time to reflect on it. If you don't come out a different trader from 4 to 5 consecutive losing trades, then there's something that you're missing on your evaluation. There's something that may be missing on your journaling, on your reflection side of things, because your reflection should be teaching you way more than the videos are themselves. We can draw up the charts all you want. I can show you every single thing about my approach, but at the end of the day, what truly matters is what the experience that you receive from the market. So with that, guys, I'm gonna let you guys go, but just remember, these are all the things that you're missing out when you're just trading demo. These are all the things that we are facing while we're trading live, and we may be avoiding, but these are really powerful, important things that we need to be experiencing as traders and as a part of our journey. So with that, guys, I'll catch you guys on the next recording. I appreciate you guys. Much love. Thank you guys for staying through the call, and clap easy, right? Trade responsibly. Peace.